Okay, folks, here we are. Good afternoon. Good Friday afternoon. How's everyone doing? My name is Kai Whitney, and it's probably been a while since you've heard from me. I am the architect behind the Ninja Order Flow Trader NOFT toolkit, and a little more information as you can find here under RedBridge Capital Consulting.com. And I will pop this into the chat box right here. Where are we? Where's that chat? Here we go. And if you are, let me get a little bit of idea. I'm going to make a couple assumptions. First off, that you are here because you are interested in order flow trading. Is that correct? Or two, let's see if this comes up, you are already a NOFT owner. I'll pop this in as well. That's information for ninjaorderflowtrader.com, information on the toolkit, and purchase opportunities or scheduling an appointment with one of the traders. Or number three, you have an interest in trading as a professional or OPM, other people's money. So which, type in the question box for me, which is it? Make sure I have the right group of you. OPM, yes, yes, yes. Okay, let's see if I can get this to show. Is there anyone in here who has traded other people's money before? You know, I forget how to show the chat box. I'm going to go ahead and leave it alone. I don't want to mess everything up. Sorry, as I mentioned, this has been a while since I've done one of these. The reason being is I have been focusing on growing the prop firm with the owners of the NOFT toolkit, and I can introduce you to some of them. You can find information about them under RedBridge Capital Consulting. If you go to Funded Traders, and you will see here there is our initial group is Bill. Have any of you heard any presentations from Bill before? There is Lee out of London, and there is Jay out of Hong Kong. Has anyone heard any presentations from Jay before? Good. Okay, great. And so these gentlemen, these three gentlemen and myself are the first launch, and it's really basically those that have been with me the longest. I met Lee and Bill about a year ago, and I met them through after they purchased the NOFT product on its first launch, which was basically a beta test at the time. But since then, they've become consistently profitable and continue to show their effort in wanting to develop as a trader and had an interest also in trading. So there are some large opportunities ahead of us, but we have to make sure that everything is, running smoothly, including the tracking systems and obviously the funding and the firm and all the stuff that's all set up. Obviously the programs, the software, the risk management. So it has been very, very intensive. And I guess in the end this has been about a 2-year process. And this all started, well, really, this has been my goal. Back in 2003, I hired an attorney while I was at Stearns, and I was launching a hedge fund and I had my funding, which was $25 million, which was small at the time, but it was an initial start. And it was based upon one of my strategies that I used consistently to make my clients money. So that fell through when we went to war with Iraq, and then that never resurfaced. Ended up staying with Bear Stearns a few more years, left 2006, before it crashed, and then went to the prop firm and traded other people's money there. And then they didn't. Then the SEC said we couldn't short the bank stocks anymore, so that was my game, shorting all the financials. So then I left in 2008-9, and raised my son, went out to Napa, bought into a winery, and it's kind of been a long journey. But something I've always wanted to do was take the skills that I've developed over the many years I've been involved with trading on both sides of the market, both from venture capital and private equity, looking at deal flow, looking at the books, and or doing IPOs and investment banking deals, and leverage buyouts and stuff like that, and of course trading with the some of the largest hedge funds and institutions in the world. So this has been quite a journey, and the process of putting this whole NOFT together was basically an attempt to develop my strategy into a visual form. So my strategy is basically looking at the auctioning market and looking at the order flow. And it's always been in my opinion that, because I've always had access to this information before I left the firms, was where are the large orders? Where are the big sellers? Where are the big buyers? And I just did not see that type of information available out there to the retail public. And what I would do is I would just filter out some tapes, time and sales tapes, filter them out, let them run in different time frames, and then take notes until this became so consistent that I started teaching it. But there was just a lot of effort in using what was out there, these footprint charts that were out there. I had to still do so much work because most of these platforms out there using the footprint, they were reading order flow incorrectly. So it really is not about how many buyers or sellers there are. It's how aggressive they're being. Is that a price that they must have? Or is it something that they're initiating a large position in? And the only way that I could understand and see this information within the market is because I had that experience doing it firsthand. And I knew that with a large book or large order, you can't just hit the bid at one price. It has to be done over time and over price. So I could see these patterns in the market. I was teaching them on my mentoring, and I was part of Global Trade Room, but very few picked it up because it took so much effort, so much work. And really the real thing that separates great traders from the failures out there are those that are willing to go the extra mile. So I'm assuming that the very few of you that are in here, that you are willing to go the extra, what are you, let me just back up for a second. Is everyone in here willing to do whatever it takes to become as successful as they thought they were going to ever be with trading? And I don't ask that question lightly. I'm sincere in that, because this is an amazing opportunity, but there's a lot of work. And I would find that the people that would come into our trade room just to wait for us to trade, call out trades. Sure, we'd call out 300 ticks a day, in trades, but the people in the room were just sitting there waiting for the next trade to be called. And that's not how you trade. If that was the case, you might as well just put your money in a mutual fund. Have a money manager or a CFT, trade your money. Don't pretend you're a trader just because you can put on a trade. Anybody can do that these days, as you know, right? So this process is actually much longer than I expected it to be, but I guess that's just the scope of the retail space. So bear in mind that this entire strategy was built upon my institutional background, built onto a retail platform. It was the least expensive way to go for me, and we chose the NinjaTrader because it was the easiest to program, and and it was free to use. As long as you traded away from the platform, it's free. So I was trying to make this approachable to many. Now, to bring you up to date, now the NOFT is actually built onto a professional platform, the same platform that JP Morgan and Goldman Sachs and other hedge funds use. But the cost per trader is way outside a retail space. But it is available to the funded traders at a certain level. So there are thresholds. So we're going to talk about the process that, if you wish to go down this route, the process you need to take. And the benefit is whether you end up committing to yourself that this is what you want to do and putting through all the work, it's still, worst case scenario, will benefit your trading. Worst case scenario, if you take the same process that I went through from the professional firms and the professional traders take, this will, in return, better your own trading, whether you end up trading other people's money or just trading for yourself, okay? Because there are going to be, risks and rewards and give and takes in any proposition, as you know. And of course, the first thing that we got into trading one of the first main reasons we got into trading in the first place is, it's no one's got to tell us what to do. We're our own boss. We are in control of our own destiny, as Paul says. But if you're trading other people's money, it's really not that. It's really not like that. You are actually, you're held accountable then. You're responsible. But that also, even if you're not even if someone else is not holding you responsible for your trades and your actions and telling you the reporting and the journal entering and why did you take this trade and how come you added to it a loser and why did you get out too early and this and that, right? Even that is a benefit to any retail trader. But it's the same process that you have to go through as a professional. So what I'm trying to say is, even if you don't end up trading other people's money, this will benefit you as a retail trader. Fair enough? Are there any questions before I move into some slides here? First off, let me ask. Go ahead with questions. But let me also ask, is there anyone in here who is not familiar with order flow? Looking at the bid and the ask at the price. Okay. Well, this is also being recorded, so I'll also speak to others that will hear this. In my opinion, and my opinion is biased because it's only come from my experience, but it seems like I'm one of the few who actually had that type of that experience, not as a pit trader, but as an on the larger size. Pit traders are there to create markets and to scout. We were the ones that could create the trends. We had the whole book. We saw the entire order, and it was our job to work the book, to work the order, and to not show our hands. So I have a little different sense than many that I have, come across in this space. Okay, so I'm going to take you down a path that I didn't just figure out in a day. I've been involved since '94, and I had a chance to be involved on both sides of the market, both from the buy side and the sell side, as they call it. Okay. So what I want you to do is I want to take you back to my class at Swiss Bank, which was probably 200 people from around the world. And this is real world training. But once you go down this path, you're never going to look at the markets the same. And this was started off with, at the headquarters, and auditoriums and 2 weeks straight, just 7 to 7, and it's grind, and it's just beating you over the head, and then you go back to your senior traders and you trade and under them for another couple of years. So that's just the beginning. But first, of course, you got to get hired from those places in the first place, and not everybody has that opportunity. So I feel a benefit that I can kind of give back now, because I see that there's a true niche in this. And as I said, the markets will never look the same after this. So let's get started. What I want to do is, in order flow trading and time and sales, I'm just going to create a broad stroke here, and then I'm going to go into the details of the funding program, okay? Because it's more important, because in order to get to the funded program, you have to understand the concepts, and you have to be a NOFT owner. You have to, because that's the strategy built within the software. So if you, but then again, even if you don't go through the OPM, you end up trading for yourself, you still get to keep the software, and you still get to keep the benefit of the training. But the benefit of looking at order flow, the way that I look at it, is looking at the markets as though, there's lots of buy orders and sell orders. There's lots of, news events and price action traders and candlestick traders and moving average and oscillators and everything else, right? And what we need to do is, this is a snapshot from the movie The Matrix. And what we need to do is we need to focus on the woman in the red dress, not just every order out there. So we need to identify not the one-offs, but the collective. We have to navigate the order flow as a professional. And what you want to do here is look at the market from this perspective. I'm going to take a pen here and I'm going to draw. And this is the tip of the iceberg, which is basically charts that you see on your screen, okay? And again, this is where the moving averages are, the oscillators, the candlestick patterns, the wave counts, the Fibonacci's, and all that kind of stuff, right? This is called price action, or this is what they call price action. When, just like an iceberg, this is really only the tip of the iceberg. You're not seeing the reality, what's beneath the surface, because you're not privy to that information. You're only privy to that information if you're, on the desk, on the floor, as those are going away, or have, the program in order to identify that information. But what you can get out of this is the understanding that whatever you're seeing on your charts is not the true sense of the order flow. Because as we all know, the markets are manipulated. They're manipulated by the order, high-frequency trading, right, or market makers. And they're one and the same now. And it's basically they're there to simply move price action to get you to do something, to create liquidity for the larger orders. And this is what 90% of the traders are looking at, is the top percent of the market. We need to focus, what's happening beneath. And I like to look at this as this beneath is what's called value. This is true value. This is price action. And the question you have to ask yourself is, who's in control? Where is value? And where is price, current price in relation to value? And if you don't have the last component, the smallest component of that equation is where's price. The biggest component is where's value and who's in control. And it's of my belief, from my experience, that if you don't know who's in control, you don't know where the large players are, you don't have an edge, a winning edge that will consistently break you into the 1%, 5% category. you're stuck in that 90% category that traders are inevitably stuck in forever. Well, not always, but for a very long time. So, in short, we want to trade where, where the institutions trade. We at least want to identify where they're trading. And then we want to take advantage of the 90% of traders who are trading off of price action. So we want to focus on what others can't see. And we want to do this in the mind of the best traders. Now, we don't need to recreate anything here. We've heard stories of great traders. We've heard of firms that don't lose money, that they never have a losing day. We hear of 15, 20-year track records. It's obviously possible. We've all probably read Reminiscence of a Stock Operator with Edward Levine, and you should reread it over and over again. But it's the book on Jesse Livermore. And it's all about predefining your risk before you enter a trade. But if you are predefining your risk on just a percentage of the equation, which is not even the real value of what you're measuring, then you've got it upside down. Okay? It's impossible. It's impossible to beat the institutions at their own game. The only thing you can do with success is wait for them to initiate a trade in the direction, and then look for them to responsibly trade, and go with that response. Okay? And to understand that when you are getting ready to take these trades, you are also willing to cut your losses without reservation or hesitation, because you know that it's the big money that is in control of the markets, not you. Versus someone getting involved in the market and saying, oh, that's a candlestick pattern that's worked for me before. That's a double top, that's a double bottom. I'm gonna buy the breakout, and it's worked for me before. But you can't seem to put, a string of weeks or months together of profitable trades. And the reason is it's arrogance. And it's not arrogance based upon, it's arrogance based upon lack of knowledge. You weren't shown the correct way to trade. You weren't stuck in in a 2-week training program, and your job was on the line kind of thing. And then every single day it's breakout sessions, and it's trading with others, and having a senior trader, and working through the psychological issues, and working through and working through and working through until you get it done, or you fall out. But it all has to be based upon an organized, systematic money management regimen for not only taking profits in the direction of the trade, but also, of course, your stops. And you also have to also understand that because you are not in control of the market, you have to acknowledge that anything can happen at any time. And just ask Lehman Brothers and Bear Stearns and Merrill Lynch and AIG and everybody else who went under. Anything can happen at any time. And we always have to show respect to the market. I'm not going to go through this here, but I want to pause and see if there's any questions. I'm going to go through, let me see if I can just fast forward this. I'll pause for questions. But I want to show you that this is how, from the iceberg, picture, now I want you to look at the market this way, in this manner. Let me grab some water real quick. Oops. I'm sorry. I just had, let me just double check. Am I still coming through loud and clear? Everybody, where is that darn? I'm sorry, one more time. Am I coming through loud and clear, everybody? Yes? Okay, sorry about that. I thought for a second I was on mute the whole dang time. Can I pause for any questions? Yes, Paul. Paul's making a statement. Price action follows order flow. So being a price action trader makes you late to the game. And it's true, but the interesting thing that I hear out there, now keep this in mind, I didn't even know what candlestick charts were. I had to learn candlestick charts after I left the firms and all that kind of stuff. I honestly didn't even know what that stuff was. So, but, well, geez, I'm sorry, this is all going off. But they were labeling that stuff as price action trading. And in fact, you're trading an indicator. Because you're looking at the open, the low, the high, the close, right? And whether it's a green bar or red bar. And you're waiting for the break of one of the low or the high, right? But you're missing all the vital information within. And so that's not price action. That's trading indicators. And you all heard by now, I hear it all the time, this saying that trading is a lagging indicator or something like that. They lag or whatever it is. But I want you to take the iceberg scenario, and I want you to look at trading this way. I want you to have an institutional edge. Remember, you don't have to be an institution to be successful in the market. You just have to watch what they're doing, and don't get run over by them. That's the name of the game. And don't be so pompous and feel that you're right versus the market or the institution that has more money. So you want to take a look at that iceberg, and you also want to know where is the advantage to the other time frame traders or the institutional traders. And the other time frame traders are not going to be advantage OTF, other time frame sellers. In other words, that's institutions. They're looking to sell up here when retail is looking to buy these breakouts, right? And it gets handed to them more often than not. And when it gets down beneath, this is the advantage of the institutional buyer, where the retail sellers, the 90% crowd, are looking to short here. So you need to almost flip it upside down and rethink your whole strategy if you choose to be successful in trading, period, whether you go OPM or not. You have to turn it upside down. You now want to set yourself up to where you are looking to buy in the area where institutions buy. You are looking to sell in the area where institutions sell. And the best part about it is because they cannot sell everything they have at one price, they have to piece it out. So you don't have to be there to the tick. You simply wait for them to show their card. And then you just ride the coattails. Now that being said, if you have the right information, does that really sound that difficult to do? That's a serious question. Does that really sound that difficult? It doesn't, does it? And I promise you, it's not. It wasn't difficult as an institutional trader because we had the information, for Christ. We weren't guessing. Goldman Sachs and JP Morgan, these guys do not guess. But yet we're out there, or the 90% crowd is out there, guessing every single trade. You don't have to do that. You can't do it. You can't and expect to be successful. And then the worst case is you beat yourself up. So I think I've set the stage. Is there anyone here who doesn't own the NOFT and just has a regular footprint chart? Yes? Okay. Let me show you. Let me show you what we're looking for. Because there will be others. I'm not sure how they're going to distribute this video. I don't know if they're going to send it out publicly or not, but here we go. You want to look at initiative activity. You can search this on the CFTC government website. That's who controls. That's where all the commercial traders report their positions. And it's sent out every week, and you can have access to that data. It indicates a strong conviction on the part of the other time frame, longer time frame investors. And those are commercial traders. And commercial traders are governments. They're ExxonMobil. They're British Petroleum. They're things like that. Okay. The institutions are those that facilitate the trades for the commercials and provide them the insurance and the risk management and liquidity. So all those guys are doing is going to market as a distribution system and to hedge their risks. Okay, that's all the market's there for. So it's all about the commercial traders. It's about keeping the wheat prices and the corn prices and the fuel prices in check, so that I like to say that so that they don't grab the pitchforks and storm the castle. And there's something called initiative buying. And it's basically when buying occurs within or above the previous day's value area. And value is it's a collection of trades. This is not letting me draw on here. It's not letting me draw on here, but it's a it's a collection of trades that occur at price over time. And that's considered value. So if you're going to trade outside of value to the top side, that's initiative buying. If you're going to trade beneath value, that's initiative selling. Now, value is relative. Value can be over a 30-minute period, a multiple-day period, a month period. I'm looking at crude. Gosh, I'm sorry, my voice. I have a price target of $37 that I came up with on January 29th. And that was taking a look at overlapping values, overlapping point of controls back from 2000 and I think it was 2005 and 3, something like that. But the market is in search of value. So value can be a 15-minute chart, a 5-minute chart, a 987 tick chart, a range bar, a wrinkle bar, whatever have you. It's wherever there's the most amount of trades that occurred at a single price. Okay? So we can take this same whole concepts and dial it down and do that. And what we want to do is, because our advantage is, oh gosh, sorry, I'm losing control over this thing. There we go. Our advantage of being small traders is that we don't have to go with the initiative activity. That would be considered a breakout trade. And we know the success rate of breakout trades. It works, but you got to take on a whole lot of risk in it, and it more often than not doesn't work, or it starts working after you've been already stopped out. Am I right? So we need to look for responsive activity, because responsive activity is all about them not being able to sell all of their orders at the same time. And so you want to initiate, comes back up, and it responds. So the responsive sellers are the same sellers or collection of sellers who are responsible for the move away from value. And that's called an imbalance. And it's large orders. It's only large orders. And the large orders are usually from the hand of an institution or a commercial trader or something who can move the market outside of fair value or value. So, again, let me just, I guess this is getting fun. Let me know if I'm going too long-winded or anything, and I'll speed it up. But this is us, right? And this is them. This is Goldman's desk. This is Morgan's desk. This is the desk I worked on, Swiss Bank, and here's Scotland's desk, right across the street from Swiss Bank. Just to give you an idea, this desk here, well, I guess it's a floor, right, is the length of 2 football fields under one roof and 1,500 traders. Scotland has 1,400 traders right across the street. And we're all looking at orders, the order book. But again, it used to be called, well, we used to all have access to the New York Stock Exchange book. But now, you know, there's level 2, there's all kinds of different ways to look at it. But what we want to do is focus on the imbalance. So we want to focus on the large percentage of orders that are going to help initiate a trade. And that's all we're trying to spot. So when you're able to do that and put that into context, then you can take a look at responsive trading, initiative trades, initiative trades, and then as it's coming back up, see if I can get a highlight. I can't get a highlight. When it's coming back up, you're looking to initiate, you're looking to go with. But you can see that the sellers in this trade imbalance highlighted are all set to a percentage, a threshold. And these red lines here are all notating large orders, large block trades. So these are obviously block sale trades. These are initiative sale trades. Moves it out, comes back in, and then continues. So this is what it will look like on a responsive buying, is the trades are initiative, and this is on the NOFT tool. So remember I mentioned this value, right? And value is relative. Well, this is a bar. I forget what bar this is, 5 minute. And as I mentioned, it could be any time frame. But this blue bar here that says 160 by 0, or this one here that says 81 by 27, or this one, this one here that says 39 by 0, that is value, or point of control, or COT, commitment of traders, where the most amount of trades were committed at that price. And then all the trades afterward are initiative trades. Then it comes back up, it tests the large initiative trades, and then they sell it even further. And they sell it right down to an area that's highlighted by the NOFT tool, a previous level of stacked sellers. So it's all done for you. So the reason why I'm going through this is because this is the strategy. This is a sound strategy based upon order flow, nothing else, and relative to value, and understanding how the institutions trade and the whole concepts behind all of that. Okay? So this has nothing to do with time frames or what instrument, whether it's options or stocks or ETFs or mutual funds or futures or Forex. It applies to all. And this is just looking at a DOM, a depth of market tool. But this time it's recording it. And then it's the algorithms within it are telling you the percentage of aggressiveness, so that you can say, hey, I'm looking at this here. The sellers are in control because all the sales are highlighted in large font. But the buyers, the value is down here, and the current price action is now up here. So the buyers are responding to these initiative sales, leaving value behind, so that's a value trap trade. And that's an opportunity to get long. So let's go. This is what This is what a NOFT chart will look like. When you test, when you initiate or initiate, fail, initiate, retrace, fail, retrace, sell. I actually got into this trade way late. I should have been, way up here. But the benefit is when you know who's in control and where is value, you can still make money even though you're late into the game. There's always going to be another opportunity to jump on board. Okay? I guess this is a continuation of that trade. Even though I was late in this trade, it still continued in that same pattern. See how it initiates and then they respond? They initiate and they respond. They initiate, then they respond. I could probably have been adding every single time. Okay, so let's pause for a break here, and then I'll go into the program. Let me look to see if there's any questions. Okay. How does the bar type affect the interpretation of order flow? Is there a best bar type or other way of monitoring order flow so the view and interpretation is not skewed by an artificial bar type? Okay. So Bob, that's a very good question, and I have made it. I have developed the NOFT and structured it to where, had it structured to where it looks like a candlestick. Okay, because I know the majority of traders out there use candlesticks. And so you want to know what the other 90% are doing, most importantly. You ever hear the Holy Grail? Your Holy Grail in this manner is taking advantage of the 90% of traders who don't have this information. That's why you're going to look at the markets differently from this day forth. And I swear to you, that is the case. You're not going to be a trader anymore. You're not going to be an investor. You're going to act more like a professional, a market maker. That will be your job. So it really doesn't matter what time frame. You can have it on a range bar. You can have it on a Renko bar, on a point and figure setup. You can have it on, what else is there? Candlestick bar, high-low close bar, anything you want. Because we're not looking at the high, the low, and the close and making a decision on that so-called price action. We're looking at the vital information that made up that bar. So what that affords you is that you can see a double bottom happening, and then you can see the real selling occurring 6 ticks before the double bottom happens. So if you can see it happening 6 ticks or more before the double bottom happens, therefore you have an edge versus someone who's going to wait until the double bottom actually happens. So it's all about having that edge, right? So we're not trading the patterns, but it is helpful to see what most of the people are trading so that you can take advantage of them. Does that answer your question? So when someone says there is more buyers or sellers or vice versa, which is impossible, that doesn't compute. More sellers versus buyers is not, that's ridiculous. But that's because the footprints out there, they're all reading it incorrectly. They're looking at the number of bids and the number of offers offered at the same price. Hello, just look at a dome. Have you ever seen the dome with the same price, with the bid and the ask? No, of course not. There's always a spread, a difference. There used to be, when it was back in the good old days, we had, half a cent spread. We'd do IPOs, we'd have $1 in every single trade. It was crazy, and that's when you wanted to be a market maker. So there's a spread, there's a difference. So it's never, you can't have buyers and sellers. If you actually see that in the tape, that's an inefficiency, and that the market's going to come in and correct that. So that becomes a target. And that's one of the strategies I go through in the advanced trading. But let's get forward. I think I might be running long. Wait, what time did we start this thing? Oh yeah, we're already 45 minutes in. Okay. So let me get to this real quick, and then I'll stop for questions at the end. Okay. So this is all about the ultimate order flow program. This is going to come with 16 pro-grade NOFT tools, professional order flow tools. Institutional, the algorithm itself is called the order flow sequence tracker. It measures the imbalance that's created by large orders. And we have gone through already who makes up the large orders and the purpose of the large orders and how they can't hit the bid with all the orders. Otherwise, that whole, for every buyer or every seller, there has to be an offset. So in order to, as an institution, because I can't hit the bid, that tells you that I have to find the other side of the order before I can sell, or I have to borrow it before I can sell. I have to find it first. You can't just sell it. But it also includes market profiling concepts, Stettlemeier concepts, and volume profile concepts, volume over time. But it's all based upon, again, order flow. But the order flow itself, the toolkit, encompasses all of the common fundamental aspects of the market. But of course, these have been developed over time. Volume reporting wasn't readily available until the 90s. Indicators weren't even popular until the late 70s. It goes back to order flow. How many buyers do you have versus how many sellers? And who's more aggressive? Who wants that tulip? Who wants that tulip? Who wants to pay up for that tulip? Right? This comes with the on-demand trading course. So this is all now on demand. It's proprietary trading education. It's a comprehensive trading approach. It is soup to nuts. It addresses market structure, auction market theory, and the basics of the market. It comes with on-demand training videos, workbook exercises, PDF manuals, cheat sheets, and more. There are weekly, for members only, live training sessions to teach you all of the technical aspects of the toolkit. You can learn the functionality of each one of the tools and any new tool that's developed or made more efficient. You learn how to use each one of the components, their advantages, their disadvantages. There is free technical support, and there are two purchase options. There's the lifetime purchase. It's $39.99, or there's a lease option, $4.99 down and $2.99 a month for as long as you use it. So you could be just upside down your first month and you're down if you decide it's not for you. Or you can say, gosh, after a month, this is great. I want to roll this down payment into the lifetime. Now this, once you have that, then you have the opportunity to get into the Advanced Trade Group, ATG. Now this is the training and recruiting program for very ambitious traders who'd like to trade like or become a professional trader. And as I mentioned, the term professional, you don't have to be working at a firm. You can go get hired at a firm if you wish, or you can just trade your own account like you're at a firm. But as I mentioned before and stated earlier, this will benefit you as though you're a professional. And in my opinion, if you don't have the right training, the right background, I don't think you should be trading, period. I tell many, many, many people, this is not a good idea for you. Specifically, if you're not willing to ask the questions and, do the hard work, the necessary work. It was not easy to get through the program. Just to give you an idea, my class of 200, in 2 years, there was less than a dozen of us left. And it's funny because in the 2-week training program, when obviously all the, everyone's, going out after the lectures and everything else, they had, for the few hours they had off sessions in the Bloomberg terminals. And they'd stay open till 10, but you didn't have to, be there past 7. Well, there was only like 30 of us who would stick around. And the janitors would have to kick us out. But of those 30, there was a larger majority of us that were still there after the 2 years program. So we did, instead of going out to the clubs and this and that, we stayed behind and kind of, we nerded it up. It's going to include live training. Now the ATG, the Advanced Training Group, includes 3 small group training sessions per week, approximately 90 minutes each. Now that's with myself, and that's with the other 3 traders who were in your position a year ago and are now successfully gone through the entire program. They are with the firm, they're funded, and they will become senior traders. We will work on strategy development, risk management, psychological capital, and advanced techniques and tricks. What this is not, and what we don't do, we're not sitting there trading, making trade calls. We are communicating. We are communicating with the other traders. What levels do you see? What do you have? I'm looking at this. I'm looking to get long down in this area. That kind of thing. You're learning through the entire process. There will be a live chat, community chat exclusive to the ATD, to the exclusive group, exchanging trade setups, homework levels, position management, trade entries in real time, and private chat opportunities with the professional traders and as a group. And that leads you into the next step. This is once you have gone into, once you become a NOFT owner, become a part of the ATG group, then there's the opportunity to qualify for funds. And this is not about, hey, give us money and we'll let you leverage and give you money. No, this is trading our own capital. We have set up a German bank and a fund where we have access to funding multiple traders with more than $5 million at a time. Of course, we don't start you at that, but there is potential to get to that point. As a senior trader, you'll have the option of trading $5 million a day. In order to qualify, you have to be tracked and evaluated, and the process alone is a daunting task. And for that, we ask for $250 a month, and we believe that it should only take you 3 months. After you're funded, you do not have to pay the $250 a month. There's no more costs. There's no nothing. You're funded. There's no commissions. There's no nothing. That's all taken from percentage. But in the ATG, during the tracking stage, you're qualifying to become a professional trader. To show us your risk management skills. And you show us, basically show us your risk management skills and you're funded, period. In the ATG, we will teach you how to trade profitably using this proprietary method. Not someone else's. The one that works. When you feel comfortable trading, and you can take as long as you like, when you're comfortable trading this method, we teach you, and you're looking to become funded, you can track your trading, and it's over a six week period. When we see what you have, what it takes to become a pro, you will have the opportunity to come into the professional trading group. And this access cannot be bought. It has to be earned. So again, I mentioned 6 weeks. So how long is the performance test period? It's 2 blocks of 3 weeks each. What if you fail? Answer, you can start over at any time until you're funded. Over and over and over. And the best part about it is you are always held accountable. I make you write down in your journal, psychological, what will you do differently? We look at all of your trades. We do private chats, work one-on-one. It is our goal to get you to be funded, because the more people we have trading $1 million, $2 million, $3 million, $5 million, the more money everyone makes. So it's a true win-win situation. And then it says here, what happens when you finalize the performance test period? And the answer is we'll contact you and talk about the next steps. So the professional pro trade group is to qualify in the ATG performance test and join the group and trade our capital. There's no personal capital required. 0. You do have to own. You have to be an owner of the NOFT, because that is the strategy. And we built this on the Ninja platform to where it's a free platform. The platform it's now built on is a professional platform. And as I mentioned, it's far out of reach for most retail. But I'll give you an idea. All in all, it'll run us $3,000 per trader per month. But it's basically the NOFT tools on a dome. And it's on the same dome platform that Goldman and JP Morgan uses. It is the real deal, but it is better to learn on this next to free platform. So again, the commitment, what was that, $3,900? One-time fee, $3,900. Even if you don't end up being a professional trader, that's yours. You get all upgrades, the NT8. If you want to switch over, if we end up going through some other platform, it's all free upgrades. Nothing's ever charged after that. It's obviously $39.99 for a lifetime versus what we need to pay as a pro trader. $3,000 a month is definitely an advantage. That's pretty much it. So who I would like you to contact is talk to one of the pro traders. And let me see if I can copy. No. Okay. I'm going to pop this. All you need to do now is schedule a one-on-one with one of the guys. It's free of charge. There's no obligation. Ask all the questions you want about the software. Ask all the questions you want about the opportunities. Whatever have you. You don't have to do it in a group setting. There's no pressure. There's no sales pressure. So I'm going to pop this into the chat box. Chat. So that you all have it. Why am I, excuse me. There you are. Let's see if there's any questions come through. Where there are weekly presentations, no, they're not. They're not recorded. The weekly Tuesday ones. Those are just the FAQs. Those are for, again, anybody who's an owner can join the weekly presentations. What's Apex investing? Sorry, I don't know what that is. Apex investing. Apex investing. It's on your screen. What markets have the liquidity? Okay, so that's a very good question, Alex. Okay, these are the markets that you'll be trading. I'll type it into the chat box. You have the S&P, you have the FGBL, you have the FESX, and you have the 10-year. Those are the markets you're allowed to trade. In the beginning, there's three tiers. You start with a $50,000 account. There's three tiers as you move up to 100 and you get to the 500 mark. You can still only trade those markets. Then after that, and you're now onto the X-Trader platform, you now have access to crude markets, gold markets, and other markets. The reason being is the data that you're trading now through your broker is not even real data. It's yesterday, it's 5 seconds ago data. One of the biggest expenses is the actual being on the server, on the floor with live data, on the trading technologies platform. And that is where you can get larger execution in crude. Here you're limited to about 5 contracts. When you're trading direct access, you can do 10, 15, 20, up to 50 in crude. Now you can't hit 50 all at once. It still has to be pieced out, but you could almost never do that as a retail trader, even if you had the account size. Okay. Price action, order flow. How does so let me go ahead and stop the presentation. I'll stop the recording. I'll answer more questions. But let me type in j@ninjaorderflowtrader.com, and let me just go through just the experience that they've asked them, the experience they had, and just the benefit of trading as a group. So just to give you an idea, when we first brought on the tracking for everybody, and then we told them these are only the markets that you can use. These are the risk managements. These are the contract sizes. And this is what you have to do, and you're being tracked and judged and to become funded. These traders who have done very, very well. I mean, we're talking very easily making 500 to 1,000 a day in crude mainly. Now we're asking them to trade other instruments with stricter requirements. Nobody did well the first 2 weeks. So I broke out into small sessions, and we went through each and every one. And I'll just give you an idea of just over the last couple of weeks and just over the last 4 days here, where they went through not being consistently trading at all through the tracking period. I mean, at all. Hitting the drawdowns, such and such, but being able to, as a group, being able to instruct them and help them through, because I know they're great traders. They've been doing well for some time using the NOFT product. 500,000 a day is nothing to sneeze at. But now we're back to them doing 200. Okay, one did 284 ticks today, and so almost $3,000. Let's just call it 2,500. Another did 123. Another did 153. Yesterday everybody was over 100. And in the last 4 days, one trader did 764 ticks in 4 days. And this is all using maximum 2 contracts. And a very small drawdown. Very small. So what I'm trying to tell you is that this strategy, this bias, this way to look at the market, you can mitigate your risk so well that this process alone is worth, it's worth going to Harvard and MIT and getting hired onto a desk at Goldman or something. It's the same process that I went through. but not everybody had the same chance. Okay, so let me go ahead and stop the recording, and I'll go ahead and I'll stick around for a few more minutes. Let me take a quick break, and I'll be right back. I'm going to stop the recording, type in some questions.